nightly business report.
Good evening. Tonight, Sri Lanka's cabinet authorizes the recruitment of 5,882 individuals for public service, 2,500 positions of which designated for the Ministry of Public Security. A fully automated terminal created in partnership with the Chinese construction company Shanghai Zhenzhou Heavy Industries officially commences operations at the port of Colombo in Sri Lanka. The Colombo Stock Exchange closes lower as both the All-Share Price Index and S&P SL20 indices see declines. And President Donald Trump's tariffs unsettle investors, sparking concerns of an economic slowdown, triggering a stock market sell-off, erasing $4 trillion from the S&P 500's peak last month.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka's cabinet has approved the recruitment of 5,882 people for public service, with 2,500 positions allocated to the Ministry of Public Security. Minister Nalinda Jayatissa emphasized careful consideration in the hiring process.
Sri Lanka's cabinet had approved the recruitment of 5,882 people for various public service positions, with the largest allocation of 2,500 roles for the Ministry of Public Security, including police personnel. The Ministry of Public Administration, provincial councils and local government will receive 1,615 recruits, while the Ministry of Transport, Highways, Ports and Civil Aviation will get 909. The Ministry of Women and Child Affairs will hire 109 and the Ministry of Environment will add 144 positions. Despite the government's digitalization push, only 3 positions have been approved for the Ministry of Science and Technology. A committee previously reviewed recruitment requests from ministries taking into account needs, priorities and timelines. The cabinet has endorsed the committee's recommendations, which includes roles for the Ministry of Finance, Fisheries and Education, among others. The move is a part of efforts to address critical gaps in the public sector workforce. The recruitment process will be carried out with the careful consideration to ensure optimal distribution of resources.
Former Central Bank Governor Dr. Indrajit Kumaraswamy called for the establishment of a tariff reform commission to address Sri Lanka's distorted trade tariff structure. Speaking at a central bank event, he noted that vested interests have heavily influenced the current tariff system. Kumaraswamy emphasized that Sri Lanka's increased trade protection has diverted resources to the non-tradable sector, making the country less competitive in the global market. He pointed out that para-tariffs such as CESS and PAL have kept Sri Lanka out of dynamic global supply chains. Kumaraswamy urged for a reduction in trade protection and a more competitive exchange rate. Sri Lanka has committed to trade liberalization as part of its agreement with the International Monetary Fund, with plans to rationalize para-tariffs and support local businesses. Deputy Minister Chaturanga Abesinghe urged Sri Lankan businesses to adopt digital supply networks, highlighting the need for real-time data and blockchain technology to stay competitive in the global market. Deputy Minister Chaturanga Abesinghe urged Sri Lankan businesses to embrace digital supply networks, emphasizing that traditional linear supply chains are outdated. Speaking at the 2030 and Beyond Forum, he highlighted the importance of real-time data and blockchain technology in modern supply chains, calling for greater transparency and efficiency. Abesinghe warned that businesses failing to adapt to these advancements will become irrelevant in the global market. He stressed the need for Sri Lanka to catch up with industrial revolutions, lamenting the country's slow adoption of technological progress. The minister also called for businesses to adopt long-term strategies and increase productivity while emphasizing the importance of workforce planning. Abesinghe revealed plans for a unified industry and government strategy to achieve the country's $45 billion target. Despite fiscal challenges, he assured the government's support for businesses during this transition. The Sri Lanka Tourism Development Authority hosted a successful event focused on facilitating tourism investments, attended by key government officials, including the Minister and Deputy Minister of Tourism. The event emphasized the importance of collaboration between government agencies to streamline investment approval processes, which would enhance Sri Lanka's attractiveness for global tourism investors. Minister of Tourism Honorable Vijitha Herath highlighted the need for collaboration to unlock the sector's potential, while Deputy Minister Professor Professor Ruan Ranasinghe stressed the importance of strong partnerships. A key initiative discussed was the Land Bank Management Information System, developed to support tourism investments by cataloguing available land resources. The event concluded with a reaffirmed commitment to making Sri Lanka a more investor-friendly destination, driving growth and creating jobs in the tourism sector. The SLTDA's Investor Relations Unit has already facilitated over 1,200 tourism investment projects with a total investment value of $8.7 billion. A fully automated terminal developed in collaboration with Chinese construction firm Shanghai Zhenzhou Heavy Industries has officially begun operations at the port of Colombo in Sri Lanka.
The Colombo West Terminal at the port of Colombo has officially begun operations. The fully automated terminal was developed with the help of Shanghai Zhenzhou Heavy Industries, a Chinese construction firm. With a 1,400-meter quay and a depth of 20 meters, CWIT can handle 3.2 million TEUs annually. CPMC provided advanced equipment including 8 STS cranes and 18 ARMG cranes to ensure efficient terminal operations. The STS cranes are capable of handling ultra-large container vessels up to 24,000 TEUs. The terminal automated systems such as automated spreader system improve operational efficiency by addressing challenges with container positioning. CWIT is a joint venture between the Sri Lankan Ports Authority, John Keells Group and Adani Ports and Special Economic Zone.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange ended lower today with both the All-Share Price Index and S&P SL20 indices declining. The market continued its negative momentum from yesterday with cautious investor sentiment. Trading volume was moderate, with some stocks showing resilience despite the overall downturn. For further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. Today, the board market experienced continuation of the profit-taking sentiment from the last couple of weeks. As a result, the all-share price index saw a continued downtrend during the trading day, majorly driven by LOLC Holdings, Commercial Bank, HNB Bank, Haley's and John Keells Holdings. The all-share price index closed at below 16,000 levels, losing 290 points at 15,710 today. However, the turnover witnessed a notable uptick from yesterday, driven by increased participation from retail and high net worth investors. Accordingly, the market turnover recovered, rising to 2.5 billion rupees from 825 million rupees from the previous day as well. However, this is still 15.7% well below the monthly average of 3 billion rupees as well. In terms of contribution to the overall turnover, the banking sector took the lead with the contribution of 41%. This was followed by the diversified financials and capital goods sectors, which produced a joint contribution of 28%. Thank you.
Sri Lanka's Treasury Bill auction saw successful sales across all maturities, with the total amount offered fully subscribed. The 3-month, 6-month and 12-month bills were all sold at slightly different yield rates compared to previous auctions, but all remained steady. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
Thank you, Anuradhi. The Central Bank of Sri Lanka conducted its weekly Treasury Bill auction today and raised a total of 165.5 billion rupees. The majority was offered from the 6 months and the 1-year bill, where 55 billion and 80 billion was raised from the said maturities. Looking at the auction results, we saw the 3 months bill recording a slight decline of 1 basis points during the day, while the 6 months and the 12-month bill remained unchanged. Therefore, we saw the weighted average yield of the 3 months maturity coming down by 1 basis points, as I said before, to 7.52%, while the 6 months bill was recorded at 7.86%, while the 1-year bill was recorded at 8.34%. Meanwhile, looking at the secondary market, we saw the yield curve remaining broadly unchanged, with moderate volumes recorded during the day. The majority of the transactions was enticed on the belly end of the curve, while the tail end of the curve while the tail end saw thin volumes during the day. Thank you.
Gold prices rose in Asian trading today, bolstered by a weakening US dollar, which hovered near 4-month lows amid growing concerns over a potential US recession. Spot gold gained 0.4%, reaching $2,900.17 per ounce, while gold futures for April delivery rose 0.2%, trading at $2,904.50 an ounce. Investors are closely monitoring the upcoming US Consumer Price Index data set for release on Wednesday, as it could significantly impact the Federal Reserve's monetary policy decisions. The market remains jittery amid ongoing trade tariff uncertainties, with President Trump's administration imposing 25% tariffs on imports from Mexico, Canada, and additional measures targeting China. These policies have fueled concerns about economic slowdowns and rising inflation, further driving demand for safe haven assets like gold. Oil prices rebounded slightly today, recovering from earlier losses despite concerns over a potential U.S. recession. The impact of tariffs on global growth and OPEC Plus's decision to focus on increasing supply. Brent crude futures rose by 0.3%, reaching $69.46 per barrel, while U.S. West Texas Intermediate crude futures gained 0.1%, trading at $66.12 per barrel. Despite market uncertainties, Brent's level around $70 a barrel is considered a strong support point, with the potential for a technical bounce. Servo Sarkar energy sector team led at DBS Bank noted that OPEC Plus's supply response will remain flexible, adjusting to prevailing market conditions. The Sri Lankan rupee saw a slight depreciation against the US dollar today compared to yesterday. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has risen while the selling rate has also increased. However, the rupee has largely appreciated against a range of foreign currencies, including Gulf currencies. Let's take a closer look at how the Sri Lankan rupee is performing against other major global currencies. Short break now. This is the Nightly Business Report. Welcome back. Evolution Auto Limited Sri Lanka has partnered with Geely Holding Group to bring sustainable and innovative mobility solutions to the country. The strategic collaboration aims to enhance Sri Lanka's automotive sector with cutting-edge technology and eco-friendly vehicles.
Evolution Auto Limited Sri Lanka has entered a strategic partnership with Geely Holding Group to introduce sustainable and innovative electric vehicles to the Sri Lankan market. This collaboration aims to transform the nation's transportation sector with the state-of-the-art EV technology. Evolution Auto will serve as the official distributor for Geely Ridara pickup vehicles available in both 2WD and 4WD versions. Evolution Auto will serve as the official distributor for Geely Ridara pickup vehicles available in both two-wheel drive and four-wheel drive versions. Geely, a global leader in automotive innovation, holds a dominant market share in the Chinese EV pickup market and is renowned for its advanced electric mobility solutions. The partnership focuses on environmental sustainability and high-performance electric vehicles tailored to the Sri Lankan market. Viran De Soisa, Group CEO of Evolution Auto, highlighted the collaboration's alignment with the company's mission to promote electric mobility in Sri Lanka. Geely spokesman expressed excitement about the expanding presence in Sri Lanka through this partnership, aiming to offer consumers exceptional driving experiences while supporting a cleaner future.
Sampath Bank PLC has partnered with Indra Traders Private Limited to offer exclusive leasing benefits for vehicle buyers in Sri Lanka. The partnership provides attractive leasing facilities with a concessionary interest rate across all repayment tenors. Customers can pay insurance premiums through tailor-made insurance loans with no interest charged if paid within 2 months. Additionally, Sampath Bank is offering credit cards with no joining fee and a first-year free card, allowing insurance payments to be made with 0% interest over 12 months. Indra Traders will provide exclusive benefits including extended warranties and discounts on spare parts and services. This collaboration aims to enhance the vehicle ownership experience by offering innovative financial solutions and added value to customers. Assetline Finance Limited has partnered with David Pieris Renewable Energy Limited to offer green loans supporting renewable energy solutions, making sustainable energy more accessible. Assetline Finance has partnered with David Pieris Renewable Energy to offer specialized green financing options for solar energy systems. This collaboration aims to support both individual and commercial customers in adopting renewable energy aligning with Sri Lanka's energy transition goals. Through its green finance scheme, Assetline Finance will facilitate access to affordable solar energy financing, helping reduce carbon footprints and promote sustainability. The initiative directly supports the United Nations Sustainable Development Goals, including SDG 7 and SDG 13. The exclusive green loan program designed for DPRE customers offers easy access to solar systems with flexible financing options. The Memorandum of Understanding was signed by senior officials from both organizations, including Assetline Finance Director and CEO Ashan Nissanka and DPRE Chairman Jayantha Ratnayaka. Ashan Nissanka expressed confidence that the partnership would play a significant role in driving Sri Lanka's transition to renewable energy. Kangaroo Cabs has launched Sri Lanka's first tap-to-pay taxi hailing service, allowing passengers to pay via Visa or MasterCard using the driver's NFC-enabled phone. This innovation eliminates the need for cash and POS terminals, providing a seamless and hassle-free payment experience. In partnership with Genie Business, Kangaroo Cabs has integrated a system that automatically retrieves the correct fare, ensuring accuracy and efficiency. The company has also redesigned its website, making ride bookings easier with features like ride tracking, account management, and 24/7 customer support. Additionally, Kangaroo Cabs introduced Kangaroo Miles, a loyalty program that allows customers to earn miles for future rides or buy them for added flexibility. These technological upgrades position Kangaroo Cabs as a leader in customer service and innovation in the Sri Lankan transportation industry. SEAT Kalani Holdings has launched the innovative Load Max Pro Tyre series, offering cost-effective and high-performance solutions for Sri Lanka's transportation sector. The new tyres promise impressive mileage, costing less than ₹2 per kilometre per tyre.
SEAT Kalani Holdings has launched the Load Max Pro Tyre series designed to improve performance, durability and cost efficiency for Sri Lanka's transport sector. The first two sizes, SEAT Load Max Pro 18++ 10.0020 and SEAT Load Max Pro 750/16, were unveiled at an event attended by dealers and industry stakeholders. These tyres cater to heavy truck and light trucks, offering longer life, high load capacity and better stability. The innovative design features a new high-strength casing, improved tread compound and optimized shoulder rib for enhanced tyre longevity and performance. SEAT's new tyres are built for low heat generation, reducing wear and enhancing durability. SEAT Kalani's Chief Operating Officer Shamal Gunawardana highlighted the series is a testament to the company's commitment to innovation. With the substantial investments in SEAT technology and quality, SEAT remains the leading domestic manufacturer and a key player in Sri Lanka's tyre market.
HMB PLC has signed a Memorandum of Understanding with Homelands Group to offer exclusive home loan facilities for customers purchasing properties from the developer. The partnership aims to make home ownership more accessible through tailored financial solutions with attractive payment schemes. HMB will provide competitive interest rates and flexible repayment terms to customers investing in Homelands Group's residential projects. Homelands Group, recognized as the best developer at the Property Guru Asia Property Awards in 2024, has a strong portfolio of housing developments. Both companies aim to support the growing demand for luxury properties in Sri Lanka's recovering real estate market. This collaboration highlights HMB's ongoing commitment to driving positive change and supporting the housing sector's growth in the country. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks saw significant declines today, led by sharp losses in the tech sector following a sell-off on Wall Street amid growing U.S. recession concerns fueled by President Donald Trump's trade policies. Major U.S. stock indexes, including the tech-heavy Nasdaq Composite, plunged 4%. In Japan, the Nikkei 225 fell 1.4%, hitting its lowest level since mid-September of 2024, while the Topix index dropped 2%. Shares of SoftBank Group, Tokyo Electron and Panasonic saw notable declines of 4%, 2.2% and 4.1% respectively. South Korea's Kospi dropped 1.2%, with Samsung Electronics and SK Hynix falling 0.5% and 2.2%. In China, the Shanghai Composite and Shanghai Shenzhen CSI 300 indices both slid, while Hong Kong's Hang Seng and Alibaba stock also weakened. Futures for India's Nifty 50 were subdued, and Australia's S&P ASX 200 index lost 0.8%. President Donald Trump's tariffs have spooked investors, with fears of an economic downturn driving a stock market sell-off that has wiped out $4 trillion from the S&P 500's peak last month, when Wall Street was cheering much of Trump's agenda.
U.S. stocks plummeted on Monday, with the Dow dropping nearly 900 points to close 2% lower, the S&P 500 shedding 2.7%, and the Nasdaq nosediving 4%, its biggest daily percentage drop in 2.5 years. Monday's major sell-off followed a weekend interview with President Donald Trump in which he would not rule out the possibility of a U.S. recession. That unnerved investors already anxious about relentless tariff wrangling and other economic concerns. HSBC on Monday downgraded U.S. equities, citing uncertainty around tariffs. Tech stocks were under pressure on Monday as investors unwound yen carry trades, which involve borrowing Japanese yen at a low cost to invest in other currencies and assets offering higher yields. Shares of MicroStrategy and Coinbase dropped more than 16% and 17% respectively, tracking weakness in Bitcoin, which fell below $80,000. And shares of Tesla plunged 15.4%, the stock's largest single-day decline since September of 2020. The stock has given back all its post-election gains after CEO Elon Musk backed Trump and was tapped to lead his government efficiency effort.
Ford will inject up to $4.8 billion into its struggling German operations. The American auto giant said recapitalizing its German operations will help support business transformation in Europe.
Ford will inject up to $4.76 billion into its struggling German operations. Monday's announcement comes as the US carmaker tries to revive its European business. Ford said recapitalizing its German operations will help support business transformation in Europe. It also believes the move will help it to compete with a fresh product portfolio. The auto giant further said it needs to simplify its governance, lower costs and drive efficiencies to build a sustainable business in Europe. The new funding commitment includes a capital injection to address overborrowing at its Ford Werke German arm and provides funding for a multi-year business plan. Ford also called on European policymakers to establish a clear agenda to promote electric vehicles, and it wants them to bring emissions targets in line with consumer demand. Europe's car industry has been forced into plant closures as competition from China has hurt demand. The sector is also bracing for US tariffs. Ford is cutting thousands of jobs in Europe, many of them in Germany, where domestic giant Volkswagen has also struggled and moved to close factories. Both companies have drawn worker protests in response.
But that's all from us here on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.